In today's show, analysts debate Bitcoin's next step after today's $45,500 retest. And as crypto analyst Income Shark shares here, 4-hour looks like it wants to correct a bit. This is not being bearish. I'm just noticing 3 reasons why a little correction makes sense. Super trend is going flat. We probably will retest this breakout and we can bounce at the trend line. Good time for me to take profits. And as shared here by BTC Fuel, Bitcoin is looking amazing after being up 25% in the last 2 weeks and breaking a major resistance. Some sideways consolidation should be good for Bitcoin. In the next months, I believe that Bitcoin will move slow and steadily up like in 2012, but altcoins will go nuts. And as Plan B shares here, Bitcoin March close, $45,517. And as pointed out here by Root, after surges, there are pullbacks. HODL and make sure you're a part of the long-term trend. Sage advice. And quoting Dennis Miller, in 10 years, anyone who bought and held Bitcoin under $100,000 will seem like a genius. Be a genius. Buy more Bitcoin. Touche. Also in today's show, Michael Saylor says financial markets are not quite ready for Bitcoin bonds. That's right. In regards to El Salvador's Bitcoin bonds, he goes on to share, that's a hybrid sovereign debt instrument as opposed to a pure Bitcoin treasury play, that it has its own credit risk and has nothing to do with the Bitcoin risk itself entirely. New York can issue $2 billion of debt and buy $2 billion worth of Bitcoin. The Bitcoin is yielding 50% or more. The debt costs 2% or less. And this just in breaking news, Bank of Japan official calls for G7 nations to adopt common crypto regulations. Quoting the Bank of Japan governor here, we consider it important to prepare thoroughly to respond to changes and circumstances in an appropriate manner from the viewpoint of ensuring the stability and efficiency of the overall payment and settlement systems. Also in today's show, more breaking news. Vaneck says Bitcoin could hit $4.8 million per coin if it became the global reserve asset. That's right, as Jan Vaneck shares here, one of our colleagues' views, interesting analysis in which Mike Alfred shares. Asset manager Vaneck says the Bitcoin price implied by the global M0 and M2 is between $1.3 and $4.8 million if it replaces fiat currency reserves as the next global reserve asset. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. As you can see, the entire crypto market is currently correcting and in the red. But where's the Bitcoin price likely to go next? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs, along with a $100,000 Bitcoin price. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. Today's episode is brought to you by FTX US, built by traders for traders. That's right, FTX US is the best way to buy and sell Bitcoin, Ethereum, Solana, as well as other digital assets. And did you know you can trade crypto with up to 85% lower fees than its top competitors? That's right, there are no fixed minimum fees, no ACH transaction fees, and no withdrawal fees. Also note that FTX is the only leading exchange that supports both Ethereum and Solana NFTs, and there are no gas fees. And you might have heard of them from their Super Bowl commercial with Larry David or their partnership with Stephen Curry and Tom Brady. That's because the world's biggest names trust FTX. And they have a special promo they're running right now where if you download the FTX app today and use my promo code Crypto News, you can earn free crypto on every trade over $10, truly making this a no-brainer. And the more you trade, the more you earn. So go ahead and download the FTX app today by clicking the link in the description right down below. Use my referral code Crypto News and let's start stacking those sats, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live chat. Now, the euphoric calls for a return of the bull market may have been a bit early, especially after Bitcoin bulls failed to push the price over $46,000 on March 31st. And even with the current pullback, analysts continue to expect a lower support retest at the $45,000 level. As you can see here from Cointelegraph Markets Pro and TradingView, Bitcoin's attempt to push the price above $47,500 was soundly rejected by the bears, which sent the top crypto plunging to $45,500. Now here's a look at what several analysts in the market are saying about the price pullback for the king crypto and whether or not traders should brace for further losses or prepare for another move higher. As crypto analyst Income Shark shares here, 4-hour looks like it wants to correct a bit. This is not me being bearish. I'm just noticing 3 reasons why a little correction makes sense. Super trend is going flat. We probably will retest this breakout and we could bounce at the trend line. Good time for me to take profits. Now, the next available levels of support to keep an eye on were discussed by market analyst and economist Caleb Franzen, who posted the following chart showing the 21-day, 55-day, and 200-day exponential moving averages for the King crypto. Quoting him here, sometimes it's helpful to cut out all the noise, remove price structure analysis, and just look at the exponential moving averages. Yellow equals the 21-day EMA, which is fast. Teal equals the 55-day EMA, which is medium, and blue equals the 200 EMA, which is slow. All our potential support for Bitcoin, giving us a range of $42,000 to $55,000. Now, a more macro view on what comes next for Bitcoin was provided by analyst and synonymous Twitter user BTC Fuel, who posted the following chart comparing the Bitcoin price action in 2012 to its current movement. Quoting him right here, Bitcoin is looking amazing after being up 28% in the last 2 weeks and breaking a major resistance. Some sideways consolidation should be good for Bitcoin. In the next months, I believe that Bitcoin will move slow and steadily up like in 2012, but altcoins will go nuts. Let me know if you agree or disagree with the crypto analyst. And Plan B updates us here. Bitcoin March close, $45,517. Stock the flow. Let's freaking go. And root shares. After all surges, there are pullbacks. HODL and make sure you are part of the long-term trend. Sage advice, and quoting Dennis Porter, in 10 years, anyone who bought and held Bitcoin under $100,000 will seem like a genius. Be a genius. Buy more Bitcoin. Touche. And before I break down next way of the day, Michael Saylor says financial markets are not quite ready for Bitcoin bonds. But first, let's take a quick look at the overall crypto market. As you can see, all the major cryptocurrencies are currently correcting and in the red, with Bitcoin down 4% on the day, trading just above $45,100. We have Ether down almost 3.5%, trading just under $3,300, while Polkadot, Solana, Avalanche, Binance Coin, Cardano, Luna, and XRP all correcting and in the red. But all right, now let's break down our next way of the day. MicroStrategy CEO and Bitcoin Permeable, Michael Saylor, believes that traditional financial markets aren't quite ready for Bitcoin-backed bonds. That's right. Saylor told Bloomberg on Tuesday he'd love to see the day come where Bitcoin-backed bonds are sold like mortgage-backed securities, but warned that the market is not quite ready for that right now. The next best idea was a term loan from a major bank. And as Michael Saylor tweeted here, MacroStrategy, a subsidiary of MicroStrategy, has closed a $205 million Bitcoin collateralized loan with Silvergate Bank to purchase Bitcoin. Let's freaking go. The remark comes 2 days after MicroStrategy's Bitcoin-specific subsidiary MacroStrategy announced it had taken out a $205 million Bitcoin collateralized loan to purchase even more Bitcoin. Genius. This loan was unique as it marked MicroStrategy's first time borrowing against its own Bitcoin reserves, which are currently valued at approximately $6 billion to buy more crypto. Now, Saylor's comments also follow El Salvador's recent decision to postpone the issuance of its $1 billion Bitcoin-backed volcano bond on March 23rd. According to El Salvador's finance minister, Alejandro, the decision to delay the bond was due to general financial uncertainty in the global market driven by the conflict in the Ukraine. And in a new potential warning to El Salvador, Saylor said that the country's volcano bond was somewhat riskier than its company's Bitcoin collateralized loan. Quoting him here, that's a hybrid sovereign debt instrument as opposed to a pure Bitcoin treasury play, that it has its own credit risk and has nothing to do with the Bitcoin risk itself entirely. Now, Saylor added that he remains extremely bullish on the long-term potential for Bitcoin-based bonds, going as far to say that it would be a good idea for cities like New York to use Bitcoin as a debt instrument. As he shares here, New York can issue $2 billion of debt and buy $2 billion worth of Bitcoin. The Bitcoin is yielding 50% or more. The debt costs 2% or less. And since its initial $250 million Bitcoin investment back in August of 2020, MicroStrategy has now amassed a substantial 125,051 BTC, which at the current price of around 44,500 equates to over $5.5 billion. Now, MicroStrategy has made a series of separate Bitcoin purchases using the company's cash on hand, as well as the proceeds of sales of convertible senior notes and private offerings to institutional buyers. Now, Saylor's actions have gradually transformed MicroStrategy into a partly leveraged Bitcoin holdings company with shares closely correlated with the Bitcoin price. That's right, MicroStrategy is the first publicly company to put Bitcoin on their balance sheet. And if it wasn't for them, you wouldn't have companies like Tesla, who purchased $1 billion in BTC. And before I break down next breaking story of the day, Bank of Japan official calls for G7 nations to adopt common crypto regulations. But first, let's take a quick look at the overall crypto market cap, sitting just under $2.1 trillion with about $142 billion in volume in the past 24 hours, with the current Bitcoin dominance at 41.4% and the Ether dominance at 19% even. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have GMT up 42%, trading at $3.08, followed by Waves up 8.7%, trading at $55.35, followed by Zilliqa up 5%, trading at about 20 cents. And now checking out the top 100 cryptocurrency gainers for the week, you can see Zilliqa up a whopping 301%, GMT up 307%, SKL up 81.2%, and Waves up 77.8%. I want to give a quick shout out to iTrust Capital, the world's largest crypto IRA platform with over $3.5 billion in transactions. If you're looking to trade crypto tax-free, look no further than iTrust. And yes, they are backed by the world's leading institutional cold storage provider, Coinbase Custody, with a $320 million insurance policy. So go ahead and use my referral link in the description right down below to take advantage of the #1 crypto IRA provider in America. And if you sign up today, you're going to receive a $100 funding reward as a free bonus. So go ahead and use my referral link in the description right down below, and let's start stacking those sats tax-free. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 50 out of 100, which is neutral. Yesterday a 52, last week a 47, and last month a 52. We're finally out of greed and extreme greed. About time. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, like you're witnessing right now. BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. A senior official from the Bank of Japan warned G7 nations that a common framework for regulating digital currencies needs to be put in place as quickly as possible. Now, the G7 nations include Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States. The statement comes in response to the continued conflict between Russia and the Ukraine, as cryptocurrencies and their potential applications for skirting economic sanctions fall under increasing scrutiny, not ahead of the Bank of Japan's payment systems department. He said and told Reuters that using stablecoins makes it very easy to create an individual global settlement system, which would in turn make it easier for nation states to evade more traditional and regulated payment systems that use the US dollar, euro, or yen for settlement, and added that a sense of urgency is paramount if the G7 nations are to effectively coordinate regulation of cryptocurrencies and digital assets, as the current regulations do not fully consider their growing adoption and proliferation throughout the world. Makes a great point. And he also added that this regulatory framework would affect the design process of Japan's own central bank digital currency, better known as CBDC, the digital yen. There would be a need to carefully balance individual privacy with concerns about money laundering and other white-collar crimes. Now, the governor of the Bank of Japan announced at Japan's FinTech Summit on Tuesday that it has no plans to introduce a CBDC anytime soon, and explained that the Bank of Japan plans to carefully consider the expected roles of central bank money in the lives of Japanese citizens. Quoting him here, "We consider it important to prepare thoroughly to respond to changes and circumstances in an appropriate manner from the viewpoint of ensuring the stability and efficiency of the overall payment and settlement systems." Now, these remarks come just 4 days after the Bank of Japan announced that it is moving on to phase 2 of testing the viability of a Japanese CBDC. Phase 2 is set to begin this month, so any new regulations decided upon by the G7 will have some impact on this process. And he also said that a decision on whether to issue CBDC in Japan will most likely be reached sometime in 2026. That's still 4 years from now, depending on the speed at which CBDC adoption occurs throughout the rest of the world. So there you have it. And before I break down our final story of the day, Vaneck says Bitcoin could hit $4.8 million per coin if it became the global reserve asset. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,100 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store, now live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And of course, you can follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes. And if you're listening to the pod, be sure to check out the YouTube channel at cryptonewsalerts.net. cryptocurrency.net for the full premium experience with video. And of course, you can follow me on crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to follow me there. But all right, now let's break down our final story of the day. American investment giant Vaneck believes that Bitcoin has double the upside of gold. It could be worth as much as $4.8 million per coin if it becomes the global reserve asset. Let's freaking go. Now, obviously, that is a big if, of course, and Vaneck thinks that the Chinese yuan is a more likely contender. Now, the lofty assessment for the King crypto came in a Thursday Insights piece written by Vaneck's head of active EM debt credit, Eric Fine, and chief economist Natalia Gurushina, who attempted to compare the price implications for gold and Bitcoin if either were to be adopted as the backing for global currency regimes. Now, Vaneck's analysis found that the implied price for the King crypto ranged from $1.3 million to $4.8 million per coin. The lower prediction was based on Bitcoin as a monetary base, which investment database Investopedia says includes all circulating supply of a currency and bank deposits, but is not a common marker for economists to look at. And as Jan Vaneck shares here, one colleague's view, interesting analysis, referring to Mike Alfred, asset manager Vaneck, says the Bitcoin price implied by the global monetary base in M2 is between $1.3 million and $4.8 million per coin if it replaces fiat currency reserves as the next global reserve asset. Let's freaking go. Now, the higher prediction came from the more common M2 assessment, which Investopedia considers to be a measure of the money supply that includes all bank deposits with a currency and its ability to be converted into cash. And in their assessment of gold per ounce price, Fine and Gurushina lean more towards the M0 price prediction of $31,000 as a reliable starting point because a very big number of central banks have little or no reserve gold. The lack of deposits skews the M2 prediction to a much higher and less reliable $105,000 per ounce of gold. Could you imagine? All I know is this: if gold is ever $105,000 per ounce, you better bet Bitcoin will be in the $1 million. That's just a given. Now, recent geopolitical unrest has already led Russia to consider using different currencies, including Bitcoin, to transact for oil with their friendly partners, China and Turkey. Now, the trend could apply to more nation central banks and likely see the United States dollar dominance take a hit. Fine and Gurushina believe that the Chinese yuan should be considered the top prediction to a new reserve currency, but that nations will probably reshuffle their holdings no matter what. Quoting him here, central banks are likely to change their reserve mix to the detriment of dollars and euros and yen and the enhancement of something else to one extent or another. As a result, some central banks and private actors will be diversifying their reserves. Now, the analysts urge readers to bear in mind that the predictions are merely starting points for investors to formulate a framework for how to value gold and BTC in the extreme instance either becomes a global currency. And it noted that there were alternatives such as finite real estate, infinite equities, and even emergent market currencies that can serve the function of gold or BTC. I disagree there. Nothing's going to serve the function of Bitcoin. Just saying. Now, Vaneck has a stake in the crypto industry with his Bitcoin Strategy Exchange Traded Fund, which is a Bitcoin Futures Exchange Traded Fund that has $30.1 million in total net assets. The firm also recently filed with the SEC to launch a new ETF that focuses on gold mining and crypto mining companies. So there you have it. What are your thoughts surrounding Vaneck's $4.8 million Bitcoin price prediction if it did become a global reserve asset? Let me know in the comments right down below. And now for a quick recap of what I covered with you here in today's show. Analysts debate Bitcoin's next step after this $45,500 retest. We also discussed Michael Saylor saying financial markets are not quite ready for Bitcoin bonds. Also shared breaking news. Bank of Japan official calls for G7 nations to adopt common crypto regulations. And also shared with you Vaneck says Bitcoin could hit $4.8 million per coin if it became the global reserve asset. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. eCoin wrote, "Aloha JV, awesome news rundown. Keep up the good work. Much appreciated. But the Crypto News Alerts fam, you bet. Much love fam. Hodl." And our next featured comment comes from Andrew Schmidt, who wrote, "Watching you live from the beaches of Florida. Keep up the hard work. Cheers, Andrew. I'll actually be in Florida in just a few more days. Cannot wait for the Bitcoin Miami conference. Enjoy the sunshine." And our third and final featured comment comes from Chris Valerio, who wrote, "There is no Bitcoin peak, just up and up from here out. Sure, expect drops, but the old school Bitcoin cycles are done." Hey, Chris, thanks for sharing, fam. You're right. Bitcoin has no top because fiat has no bottom. And to be featured on tomorrow's episode, drop me a comment right down below.